everyone, this is Olga Yaroshevsky, and I'm happy to welcome you here today on our very special DeFi day. And we start our day with our first panel, which is dedicated to the DeFi use cases and the overview of what DeFi has brought us in 2020. So the space has seen the biggest bull run in 2020, and total value now locked within decentralized networks is very, very close to $14 billion US. Isn't that awesome? So, and also DeFi users number steadily increased by 40% during the last month of October, despite many DeFi tokens posting heavy losses for the month. And I'd like to start with a round of introductions, and I'll just quickly introduce each of our speakers, and then we'll dive deeper into everyone's perspective of DeFi. So we have on board today Stephane Baets, president of Elevated Returns. Hi, Stephane. Thank you for joining us. Stephane is behind the famous security offering for the Aspen coin, by the way. And Stephane, I know that you've been referred to as the Steve Jobs of token. How come?
Well, I don't know. That was Marco Rodez. He's one of the legendary short sellers on Wall Street. He's a big fan of what we're doing. I'm not sure if he's right, but I'll take the compliment any day. So we've been pioneering in security token. I think security token are just awesome to pledge as basically income generating token into a DeFi world, because at least you know that there is always an underlying value. And I think that people should hedge the volatility that you have into all the others by putting some of those intrinsic value token into their portfolio and really do some yield farming based on real assets.
Hold on. I hate to interrupt you. Let me just quickly introduce our panelists, and then we'll go back to that topic. I really love to hear about that. So Dan, we have Sankalp Shangari, CEO of Algobitz. Hi, Sankalp. Are you here? You're on mute.
Mute.
You're on mute.
Unmute yourself.
Sorry, guys. Can you hear me?
Yes.
Yeah. I'm. Thank you. I'm a banker turned entrepreneur in blockchain fintech. Been here for a few years now, having built and sold a few blockchain and fintech companies, and building a few more.
Okay, we're thrilled to hear about your investment advice or non-investment advice. Okay, Yatsu, chairman and co-founder of Animoca brands and CEO of Outlays. Welcome, Yat. Thank you for joining us.
Thank you very much. It's a pleasure being here. Just quickly introducing myself. I've been a tech entrepreneur for over 30 years, mostly in gaming and also early internet days. So a lot of affinity with what's happening with blockchain. Animoca brands is sort of the main thing I'm focused on, which is doing blockchain gaming and really focused on non-fungible tokens. Perhaps our most well-known projects is the Sandbox, which listed on Binance with Sand. Most recently, one of our portfolio company, which is Axie Infinity, actually just listed on Binance and Upbit recently as well. We also have multiple gaming projects like the Rev token for Formula One, and actually 25 other investments, all in the gaming NFT space. So we're big believers in this space.
And I'm very much keen on learning more about this application. Okay, thank you. Pavel, Bains, CEO of Bluzelle, welcome.
Thank you, Olga. So I'm head of Bluzelle. I'm similar to Yatsu. I came from the video game, media, and entertainment space, and then transitioned to have a finance background. So moved into fintech and blockchain and crypto about 5 years ago. And Bluzelle, our role in the blockchain crypto space is we're the data layer of it. So we're in the infrastructure play, allowing for better storage, for greater security, privacy, which we'll talk about later, how we believe that leads into proper formats for DeFi.
Yeah, and data is the key, as we know these days.
Mm-hmm.
Okay, thank you. Kelvin Ang, general partner of Plutus VC, joining us from Hong Kong. Welcome, Kelvin.
Hello, everyone. So my fund is a 200 million fund. And then thanks to the Bitcoin price today, we are already holding an AUM of above 415 million.
Wow. And I think we will talk about investing into DeFi projects to you later. Thank you. And last but not least, Anton Mozgovoy, CEO of Holyheld, straight from the UK. Welcome, Anton.
Hey guys, happy to be here. It seems like we have a very diverse panel here. So from NFT space to investments, and we're somewhere again in the middle, not on the data layer, but basically on the neobanking side. So we are building the DeFi-friendly neobank.
Okay, neobanking is another hot topic these days. Okay, thanks a lot, everyone, for coming together. I know everyone are in the different parts of the world, coming together from different time zones. So really appreciate you being here. Okay, let's start. I have let's call it a personal question to each one of you. And I would like to start with Stephane. How you've been engaged in the DeFi space, and which use cases have fascinated you the most in 2020?
So we're just looking at getting engaged. We see ourselves as traditional investment bankers. So we take great projects and we sell them, we package them and we sell them into a digital securities format. But the minute we actually put our Aspen coin on trading on T0, we receive so many phone calls from very, very smart people that are engaged in DeFi because they convince us that, you know, people would want to use true securities, especially real estate linked securities, because typically they are yield generating, and use them as collateral to do all kind of hedging, trading, and lending. So we actually in talk with a few of those very smart people to see how we can really push into that new segment. And then separately, as you know, DeFi today is 99% Ethereum based, but we built on Tezos, and Tezos just launched recently Dexter, which is their own decentralized platform. They've been creating wraparound the main assets. So as we are true believer that Tezos is the perfect blockchain for security token, and they are moving into the space of decentralized exchange as well, we obviously involved with all those projects.
Interesting. So it's time to, you know, diversify the protocols and the Ethereum domination here. And by the way, does any one of our panelists have any Aspen coins? By any chance? No?
I guess Stephane is going to send it all to us now.
That's right. We can do a swap. You give me your best, the most promising token that all of you owns, especially Calvin, since he's so up on the year on his AUM.
You have to give us 20x returns.
Wow.
Yeah, but we can certainly package a bit of leveraging and go to 20x. No, but it's great. Everybody should own some Aspen coin, joke apart, because when you go and stay on property, you're being treated like a king. You have cash rebate on your stay. We have some of the coolest brand giving like perks, like you have no idea. We're going to make some announcement this week about it. But truly, joke apart, it is something that protects you from downside because you have true value associated with a token. And I think that the danger on some of the DeFi trend that I see is that people are building hype on hype. And as long as the trend is your friend, you look very good. But I've been in capital market for 20 years, and I know that every bubble or every trend eventually reverse, and then you need to be ready to run for the exit. So to have true assets as collateral for these decentralized finance, I think it's key, at least portion of your portfolio.
Yeah, I'm sold. I'll buy some Aspen tomorrow.
Thank you, Calvin.
And now to investment, and my question here, and the next question is to Calvin and to Sankalp. So from an investment perspective, what is your criteria when choosing a DeFi project to work with and to invest in? Who wants to start?
Sankalp, you want to start first?
Sure, sure. So I just want to take a step back and give a bit of historical perspective to the whole digital asset and why I choose certain DeFi over others. If I go back 5 years, 4 years, the coins that have done well have been with certain use cases, and the only use case that has really stood out is the exchange business, and to a certain extent the lending business over the last couple of years. Other coins, some done very well and trying, and now if I look at the DeFi space with that trend in mind, with that aspect in mind, I feel that it is the next phase of fundraising, whereby the DeFi coins, the major DeFi coins will ultimately stand the truth of time. And by that I mean the SNXs, the Aves, the Wi-Fis of the world. Yes, there are opportunities always for second tier, third tier DeFi coins, but unfortunately for investors like us, we are not day traders and honestly cannot track so many things, everything going on. So sticking with the top names, because even when the rotation happens, and if you've seen the last month, 2 months rotation happening, these coins come back again and they stick out. Like Bitcoin and Ether stood in the first era, and the exchange coins, the big exchange coins stood in the second era, and I think the big DeFi coins will stand out in this era. So that's my very simple criteria, rather than going into the technicalities and all.
Calvin, you have anything to
Okay.
add?
Okay, so what Sankalp is saying is basically every one of the investors is looking at almost the same thing, apart from looking at the team and also looking at what they are doing. Do they have the background to do such a business and so on? But what I'm going to share to you is a secret of the two different types of investors there is in investing into our blockchain and crypto space. The first type of investors only look at the tokenomics price. So basically, you have this bunch of investors who invest into your token. Basically, we only look at how we are going to sell it back into the market at a higher price. So the first group of these investors, we are not interested in what background you come from, what is your business that you're going to do, whether you have a future or not, or whether even your business is scalable. You see, all we look at is, are you going to push your coin? That's all the first batch of investors wants to know. Now, the second batch of investors will be looking at the founders, the business model, okay? And also, how can you build this into a sustainable business? And usually the second part of these investors would not just want token, they would also want shares in your company. Okay? This is the second part of the investors. So basically,
and it all applies to the DeFi space as well, right?
Yes, DeFi space especially. There's so many lending companies outside there. There's so many savings companies outside there. Every one of them is promising you between 5% per annum to 35% per annum. So who are you going to invest in? So as an entrepreneur, you only have these two groups of investors to target. The first group of investors, you tailor your whole entire tokenomics to them, because they are only interested in whether or not your price will go up. And the second investors are the ones that go with you for the long haul. They want to see that your company can become the next Ethereum. But unfortunately, I think outside in the whole market, 70% or more are the type 1 investors. And you do need them. Without them,
Which
hype up your whole entire company. You need a good mix between the two.
which type are you, Calvin?
We are both. We are
Oh.
both. We look at every project differently. Some projects we look at it that this project we can make some money from it, we invest. Some of it we look at whether or not you become the next Yaroshevsky, right? Which can last forever. Am I right? Yeah.
Well,
Absolutely.
we still have some time to go, so let's see.
Yeah.
Okay, thank you, Calvin. That's some
I
interesting
think to add,
stuff.
I want to add into
Sure.
there. I think one
Go ahead.
other area you want to look at is, aside from founders in the business, is, and this is what I've realized over the past 6 months, is just the narrative behind any of these. Like the stronger DeFi projects that have actually, like the ones like SNX, Aave. I knew guys who were in it from like March 2019, and they're telling me, and I, unfortunately didn't get into it then, and they stuck through it when these things are nothing and helped build those communities. And those ones that actually did it, had tapped into communities and built it just like organically, built it up, and then they build these programs where people are just like Calvin touched on, they're hyping it up, they're supporting it all the way through. I think that is the biggest difference maker between the ones that break out from the ones that don't. Like you said, everybody's offering great platforms, great percentages, this and that. But I found the ones that have just like the best organic narrative story and community behind it are the ones that are powering through. And some of them are just like so hard to keep up with that myself, I actually am an LP in a couple of funds that these guys are, they're younger, they're out of university a few years, 5-6 years, but they're just on top of the meme culture and everything way better than I am. And so I'm like, hey, you know what? These guys are up all night watching these things and seeing what's trending. And they are long-term holders. I'm like, I'd rather invest through them than myself try to figure this out all the time.
I'm sorry to add. I think I'm totally with Pavel on that, and that's the third narrative, which is actually becoming very, very popular, at least in Asia, if not globally. Mm-hmm. The younger funds, the younger guys who are on top of this all day in, day out, and the stuff they are getting access to, and the stuff they are posting. The VCs or the investors themselves are building such communities that you as a project owner want to be a part of them versus just the money today. Because at the end of the day, it's a network. Network is a community. Community is built by these people. Marketing everybody can do, PR everybody can do, money everybody can throw, but the organic communities that these guys have built are just unparalleled.
I think it naturally goes to Yet. Please step in.
Sorry. Yeah, I was just about to add that there's maybe a fourth kind of investor. And that kind of investor is the one who actually invests in the assets of the products themselves rather than necessarily in the token, right? And I think we see this with gaming and blockchain and NFTs, where actually people are investing in the non-fungible tokens, whether it's in a pre-sale or in the assets themselves. And actually that way they become an indirect investor or stakeholder in the project, right? We've seen this with Sandbox, we've seen this with Axie Infinity, with F1 Delta Time, and so on. And that's because now you have other elements outside of the assets. When CryptoKitties first created the whole sort of non-fungible token movement, as it were, people thought of them as specific game items. But now what's the best seller in the NFT land? It's land, literally, right? And the whole sort of real estate play to develop on and to invest in and to build communities from has come now where you have, funds like Whale that are basically, or Metacoven with Metapurse. These are a new kind of investor who don't want your tokens. They want your assets inside the game. They look at the non-fungible token structure, literally like your city planning for your game, and make an investment on that basis and maybe take large chunks of land. And the demand is also large. So even with Sandbox, we sell out within 18 to 20 minutes. The supply we have at the moment, Axie Infinity, recently listed on Binance, did really well. I think one difference about NFT investors is because historically NFTs have not had high liquidity. So if you're going to invest in NFTs, you're in it for the long haul, just because you have to, right? It's like a collector. If I buy a Picasso, I'm not expecting that I can sell it tomorrow. I use it, or I have a reason to own it. So really, the space of NFT holders is small compared to the crypto guys. There's no less than 200,000 people that have NFTs. But every person who buys it tends not to flip. They tend to be more long-term, which gives a different sort of dynamic to it. And I think, they are, let's call it a fourth kind of investor. I think the DeFi space, maybe to quickly sort of go into that question, which is interesting, is, we think that blockchain is amazing because it's basically created a bank. It's created this global liquidity bank, whether it's through Uniswap or Binance or these kind of providers. And now you have a banking system that's got all the financial services, but who do I service? And the problem is there's not that much to service at the moment because most of them are tokens that have yet to have a utility. So the natural thing is it becomes speculative. And that was the beginning of, ICO 2017, 2018. And the reason why you had this very speculative nature, to Calvin's point, first type of investor, right?
Which is still the biggest.
Yes, it is there. It's the nature, right? And then now, however, you need a service. And most normal, call it normal, non-blockchain users have no reason to use crypto, right? PayPal works well. Citibank works well. Why do I need that, right? And so in order to match, many projects try to tie the real world with this sort of virtual crypto world, but you need pricing oracles, which means you have a weakness in the system. And so I think NFTs and gaming assets, they have become, in our view, the asset class that needs this kind of DeFi. So you have early forms of NFT loans, right, that have already started, NFT fractionalization. We have a rental product. People have made tens of thousands of dollars either selling, trading, or lending NFTs today. And yes, it's a small space, but we think that is the community that will power long-term utility in the crypto space. Not just because there's a lot of gamers out there, but actually it delivers something that games doesn't have today, financial services, right? And essentially creating a bank for gamers, which we think is going to be potentially sort of game-changing.
Wow, thank you. Pavel, do you have anything to add from a decentralized data perspective?
I mean, for us, what we see is, touching on Calvin and what Sankalp, the best use case of blockchain and crypto is still the first use case. It's money, it's greed, it's speculation, all those things. But as those products are getting mature, what we're finding out is that the infrastructure, and it's touching on what Yaroshevsky says too, is like the infrastructure now has to catch up and everything comes in waves. So we see that, okay, so DeFi is taking off. You're having hacks, you're having privacy issues, all these things come up. Now the infrastructure's got to get stronger. So you've got, the Oracle, like, Chainlink's Oracle. You got a couple other ones. Bluzelle itself, because we're a decentralized database, we've actually built a decentralized Oracle that we're launching. And the benefit of that is that right now, compared to others, we can allow historical prices to be stored in a safe manner, which, I mean, not to get too technical, which basically yields to you'll have better security in these products, better privacy, and better analytics. So I think the infrastructure now is going to catch up and just make DeFi even stronger.
Okay, interesting. And speaking of correlation between, finance products and financial tools and that application of DeFi, because despite the value growth and the massive social media frenzy, DeFi is still a very, very niche trend, and as yet, rightfully noted, is a tiny community, right? And it's not mature enough. But there's an opinion that DeFi should connect with traditional financial instruments, maybe look more like fintech, and it will give a massive boost to the whole loan market. But there is still, as Pavel noted, no infrastructure to use real-world assets as collateral in DeFi protocols. So, do you agree or not? And what is the solution here? And I'd like to throw it to Anton and then to everyone else.
Thanks, Olga. I think it also gives a bit of a so like what I agree and partially disagree with Yat is when mentioning it's like crypto is is a tool, it's a utility, and basically just like everybody else in the world, right? So we are all like internet users, but nobody cares what the TCP/IP protocol is. What you care about is the services, right, that are on top of it, like what kind of value you can derive from it. And if you look into what uptakes the DeFi brings is, well, it's very simple. How many actions or how long does it take your average bank to approve you for a loan, and what's the approval rate? And we're just getting started with like over collateralized loans. There's so many different concepts that are being tested out as we speak, from from flash loans to delegated loans. And this is basically just just a glimpse of the utility that you can provide to a regular user. A regular user doesn't need to understand how the delegated loan works. What they do understand is, what are my rates, what are the terms and conditions, and how how easy it is for me to use. And same goes for savings. We are there's an asymmetry of knowledge, and that's sort of like what's so beautiful about it. Like we're living and breathing this every single day, and then for us, like an APR of like 60 or 70% on stable coins is not something impossible, but it sounds impossible and weird for everybody else outside of this industry. And that's why basically when you can offer a simple savings account which has say a very conservative 10% annually, like interest on your basically dollars or pounds or euros, whatever it is, especially in the year of like post coronavirus and negative interest rates from the banks, right? It sounds like a miracle for everybody else, for a general audience. So I think that we are maybe like not one step away from it, right, but like 2 steps away. But what do we lack is we actually lack services, right? So even in the NFT land, it's still a very, again, as you mentioned, niche community. It's still only the people that do have that insight and knowledge. Those are the people that they may have been, throughout the last like crypto cycle, right? Or they just joined recently, but they have that access to information. So part of that is just like every other industry, right? So we're growing. There's the first set of adopters, and then it just keeps growing and growing. And that's why, to me, the natural process of, I would say, like, it's not the revolution, but it's the evolution. And how do you make a service that is convenient, right, and is understandable by customers, which is, we all use neobanks, which are just, it's a simple, like, application layer on top of your typical bank. It just provides an easier access to your money, right? It's just like, it makes it easier for you to understand, to look at your finance, to use it, but there's nothing fancy about it. So what if you upgrade that thing, right? So what if it's exactly the same thing, exactly the same app, exactly the same debit card that you understand? It's just that you basically boost it with, with the new tweaks and tools that we have now. So whether that's loans, whether that's savings account, whether that's, a simple remittance, which is still expensive. And the more services are going to be like revolved around the general consumer, well, the sooner we'll see that the numbers and the TVL, the AUM, or even the transactional volume, the exchanges volume are going to skyrocket.
That's an interesting point. Anyone wants to add to that?
Well, so actually, if I may, so first of all, I agree, right? I think the one thing I would point out though is that as we see it with crypto, definitely bringing in traditional gamers is one way in which you can grow the space, which we're excited about. Because to your point, people don't need to understand what is crypto, just like how they don't understand TCP/IP. But they already understand, what's a virtual asset and virtual currency, because they already spend on that. So the adoption path would seem to be the easiest way, we think, compared to, let's say, regular users, where you have to basically jump a few more hoops for let's call it, understanding. What I find fascinating with crypto, though, is that because the bank came first, all the services centered around very financial terms, which for most normal users is difficult. And when you talk about 60% APR, frankly, I will say it does worry me. I think short term it's okay as a user acquisition, but long term it concerns me because it's inflationary, and at some point it's got to come from somewhere. And I think this is why utility is so important. Why did banks first come out? They didn't come first in the traditional world. They came because someone needed a service, right? We were trading cattle before. from one place to another. And it was just impractical to be shipping basically cattle from one place to another. In fact, cattle, and capitalism sort of share the same etymological root name, because that's what we were doing. So you had a bank, right, that could do that. And, when the Medicis created sort of the double entry standard, that was the way in which you were then able to verify debit and credit. It's amazing that that system is like 500-600 years old. We still use that today in accounting. It's a very simple way to measure, basically.
That is the use case, sorry.
It is a use case. And blockchain is amazing because it's not just double entry, it's 1,000 entry, right? So that makes it amazing. But it was useful because there were people who needed the lending, whether that was to send cattle, to send product, to have like real estate, because we had property rights. And I think with the DeFi space, the bank came first. There's so much money. There's lots of speculators, to Calvin's earlier point as well. So I feel that the products currently inadvertently end up gearing towards a speculative crowd because they currently inhabit, right? If you build for Wall Street, then you get Wall Street-like products, right? But they are still, in the global scheme of things, a minority. And so the hope is that we have to bring in, like I believe, just like with the early internet days, that we're in the early adopter stage, or maybe even before, in crypto. So, billions of users will come to blockchain, right? But I think to accelerate that path, we need to put utility. And we think virtual utility is more powerful than physical utility because it's needed. Whereas the physical world, I agree with you, opening a bank account is a nightmare today, but people still put up with it, right? And it seems to work fine, right? That's the thing. Or Alipay seems to work fine, or WeChat Pay seems to work fine. But for gamers or for virtual assets, they have nothing. So I feel like, they could fuel this faster because it's a service that they don't have and they can really benefit from.
It's a different mindset.
I would go more with what Anton is saying, is that I think it's a lot simpler. It's just a custody problem. It's, what do people want? Like right now, let's look at, they want to experience. I've had more people contact me in the last couple of weeks to buy Bitcoin because now what we were saying 6 months ago, they're starting to see is actually happening. Because they're realizing there's going to be absolute pain coming, and it's the best performing asset. Then the question is, how do I get it? That's been the big pain. So once we can solve that, so crypto doesn't have to work with any fintechs. I think fintechs are just going to adopt DeFi platforms as services. And it's what Anton said, if you can offer 10% savings, you're going to draw a lot of people. Then the second question is, okay, how do I get in there? Well, they don't want to take custody and deal with all the technical stuff that we find cool. They don't want to. So as soon as banks wake up and see that we have to serve what you're saying, Yat, is we need to serve this customer base, then they'll be like, fine, we'll take custody of your crypto, hold it for you guys, and we'll farm out the yields to somebody else at the 5 to 10% place that's safe. And that's just going to bring all of the users in. It's just really it's a gateway problem, and it's just comes down to custody.
So Pavel, I agree. I think the thing that I worry about is, where is the capital that is in custody being used? So, the capital must be productive somehow. And that's the bridge to which I have the question, which is, of course, whether this is Aspen Coin or other things, there's great ways to use it, right? But when there's tokens giving 60% APRs as a way to give it to me because I can give you the best yield, then, there's a moment where you get out, and who times it is basically the thing that.
Oh yeah, that's musical chairs. Yeah,
and because my point is that because the crowd is speculative currently, a big number of them is speculative, right? So products are geared towards supporting that, and I feel like if we can give it more utility, which I think gaming is a big one, but there could be others, right? Then the capital becomes productive in a sustainable way, whether this is 10%, 60% return because you're investing in something, whichever, right? So that was really my main point, right?
To circle into that. No, you're dead on, because if you were a fintech platform that said, let me add new services, DeFi, they're not going to go to the 60% APY. They're going to go, okay, some of these yields are from a real estate token, a utility token like an NFT. We know that it gets 6 to 8%. Because that's what you need to get users in. You don't need to give them 60%. You just need to give them what Anton touched on, like 8 to 10, and they'll be happy to go there.
I also agree with the perspective of why people go into crypto. I mean, obviously, a lot of them have in the past and still do today is how can I buy Bitcoin, especially when it goes up, right? We think that actually the gamer phenomenon will look something like if people play a game, they don't know it's an NFT, they don't know it's blockchain, and then suddenly, they can sell it, right? Which we've seen with World of Warcraft and with all these sort of eBay trades, and suddenly an asset is worth, maybe $1,000 or $500 or $300. That is when we think the gamer will go, wait, let me open up a crypto wallet and figure it all out, right? So it's like, when you get a check, you open up a bank account, because you have money to deposit. You don't open a bank account before you do that. And that's, we think the same is true with blockchain and crypto.
Just with what I think there's a, sorry, Kelvin, please go on.
Okay, so on this topic, I think DeFi is the most beautiful thing to happen to the crypto world, for sure. So when you talk about 60% APR and all this, I went in myself. I got 45%. And you really need to look into the business nomics of how they get this for you. No, as time comes, of course, 60% will go down back maybe to 5 or 6%. But even at 5%, it is more than any banks that can offer you. But you really need to look into how they do this business, So 2 points again. One, if you have meet enough company in the savings and lending and space, you will find that as an investor, they reveal to us when they collect all this money, where does all this money goes to. Usually, you will find that more than 60 or 70%, 2/3 of the money are going to the same people, the same companies. I mention names because I don't want to promote other people, But
why? We're talking use cases. I mean, you can say names. Why not? We're talking about real life.
Okay, so are going into like solid returns projects. Now, of course, everyone is worried. Hey, come on, big banks like HSBC are not able to give you even 4%. How can the DeFi space give you 12%? 3 times or 5 times of banking interest. So you have to look at the detail. The APR is only for 5 days. Every 5 days they adjust the APR, and you got to go back in, and that depends on how the market movement is like. So that's why sometimes when I meet certain people, if you do not know how the business mechanics work, you do not know how these people make money and how these people actually make money for us. This is a very, very key point. So DeFi is the most beautiful thing that happens, if you ask me, to the crypto space. Okay? The same is going to happen for the asset-backed token, which Stephane is doing. Okay?
Yes, Stephane wanted to add something here, I guess.
That's probably the next biggest thing for 2021.
I think, Kelvin, we need to go back to what you say. You said there's 2 types of investor, right? Speculative and then business driven. And when you look at return or yield, there's 2 components to a yield. One is capital appreciation, which is speculation on price. The other one is economic return based on the use of the asset. Now, I can tell you, in the real estate world, when you buy an asset, you have a hope that is going to yield 4 to 5%, right? So if you're going to take a 4 to 5% yield into a 10% yield product, you have 2 ways to do that. One is to drive the underlying price, which is what's happening in the DeFi world right now. You have a bull market, so you have natural capital appreciation. And the other one is leverage on leverage. Now, the problem leverage on leverage is when people run for the exit, you're going to realize that whoever is the last one holding the piggy is not going to look pretty. If you look at capital appreciation, you need to run a modeling analysis. What happened to your yield if tomorrow Bitcoin drops by 30%. And if you feel that the team offering the product can still deliver 30, 40% in that case, then you should go all in. But I tell you, in my humble opinion, 85% of the product out there are built on a bull cycle, and they're not going to deliver any yield into a bear cycle. Now, because we are super early in the game, it's probably okay, because we know there's more money coming in. So more money coming in means higher price. What I challenge everyone to do is, what are the inflection points? Are you going to go straight from 14 billion locked to 50? Then you should go all in. But if you think 50 is going to be a tolerance, basically threshold, then do what Calvin just said, and yet too, is do your homework.
Stephane, I just want to add here, obviously nobody knows the answer. Is 14 the inflection, or 50, or where is the inflection? I just want to bridge what Kevin and you are saying from a perspective that there is a third layer to this discussion, and that is nothing of this is possible without smart money, which is institutional money coming in. If Bitcoin does not go up, DeFi will not go up. There is no bull cycle. There is no bullish. And when Bitcoin goes down 30%, 20% is anybody's guess. And when DeFi follows that is anybody's guess. Definitely we're in a bull cycle. So I agree with you. We are enjoying all this. When it comes back, most of us definitely will be left hanging with nothing. But without smart money coming in, and last 2 years, smart money did not come in because most of them burned their hands in 2017, 18. With the advent of smart money coming back in, we are seeing all this. And this, if somebody was to gauge how long this can sustain, in my opinion, watch that macro. Watch why is the smart money coming in and how long it's going to stay. And answer to that, the macro answer is stimulus. That money has to go somewhere. Stocks cannot continue wildly going up. That money has to move into gold, has to move into Bitcoin. Once it trickles down to Bitcoin, obviously the first layer of investors that Kevin was talking about, they want to invest 10, 20% in Ether, and then it trickles down to DeFi. But if the top layer stops, everything stops. And that's where you are looking for your chair.
I think we are very over focused on the short-term investment, but what we forget here is the technology part. I mean, look, the finance actually has never been so easy to build on and integrate. You know, there's a specific reason, you know, and we're talking about use cases right here. It's called money Legos, and you know, right now, so when building our neobank platform, it's not that we build everything ourselves. We actually really pick just, you know, the best projects in every single aspect, whether that's, you know, again, loans, whether that's, you know, yield aggregators, whether that's, whether that's, again, so say Pavel, right? So whether it's infrastructure. And this is something that will not go. This is only the beginning. Look, guys, I mean, if Bitcoin goes down and, you know, the price of the tokens goes down, the technology is there, and what we are building is is actually changing the way the game works. And even when we talk about smart money, institutional money, retail money, now that's they're all dependent on trends and cycles, but the technology is what changing those cycles and trends going further. So, it's sort of like when everybody expects Bitcoin to go up, right? It won't happen just because, it's the nature of the market, right? When everybody expects something to happen, it will not happen. Just going back to use cases, I think, and then, when describing, even the, like the virtual space, that's just one of the, and I agree, that's one of the major, like, upcoming, right, use cases there. What's interesting is that you've mentioned is that it's the younger audience and younger generation that do understand the value of the, the digital asset. You don't have to explain to someone, it's like, well, why would you buy something that's worth $100,000? It's just pixels on the screen. Well, it's not. And that's the same to the use case to DeFi. It is, it's not token price, but it's and was the technology that's that's being powered by it. So it's it's completely separate. And sometimes the project can be overvalued, undervalued, but over the time it's still the technology, right, that sort of like prices everything in. And that's why we're talking about ETH being why does DeFi lives on Ethereum? Like it does not happen anywhere else. I mean, the numbers that are like on Neo, like on Tezos, on Tron, great platforms, but DeFi lives in Ethereum only. Like everything else is neglectable at this point. Why? Again, technology, right? And it wasn't the trends. It wasn't the institutional money in Ethereum rather than in Tron. EOS has raised $4 billion. Like, what does it do? Like, literally, what does it do? And that's why, again, going back to, technology, right? And use cases there.
Maybe if I can quickly interject, but all for technology.
EOS is coming back. EOS is definitely coming back.
Okay. But, technology, the use case that drives it, actually historically, at least if you look at the growth of the internet or smartphone, has been, of course, the users themselves as a use case, right? So, I mean, if you look at sort of the internet, the technology was there, slow and buggy as it may have been. But, what was one of the big movements around that was when eBay came about, or in the early days, it wasn't called eBay, and they were basically selling Beanie Babies, right, as a collectible. And that function on the internet where people were suddenly able to trade their favorite Beanie Babies over an online platform that was more efficient than sending it through mail order was one of the first big triggers for people saying, hey, I need to go to the internet because I can do that, right? And so these are the triggers. I think blockchain found that trigger with the finance world first, just because of the circumstances of the token. And I think, whether we've reached the top of sort of, let's call it the financial world, for the next wave to come, I don't know, but I think it's all about finding more of those really powerful applications that bring that adoption and that utility, and therefore create more of a stable platform. I think the users themselves, to your point, Sankalp, I think it's smart money matched with smart long-term entrepreneurs. Right? And I think the one thing that I'm really excited about blockchain is that I had this. It's been a while since I had this feeling where, where are the smartest people hanging out, right? And actually, I think they're hanging out with blockchain, right? In the blockchain industry. I don't say this because we're all hanging out in it. I mean, this could be a little self-serving, but it is where I think the smartest people hang out, right? It's like coffee shops in Vienna in the past, or Starbucks in Silicon Valley, right? Where the smartest people hang together is where the greatest innovations ultimately end up coming. And they have crazy ideas, visionary ideas, revolutionary, ball-busting ones, breaking sort of all sorts of things. And that's what I think is happening in blockchain. And that's why it's exciting. And the smart money will help fuel it, but it's a smart entrepreneurs. And they happen to be young because many of them are not sort of restricted with the past. So I think I'm just sharing that excitement.
Why don't we go to the next question? Otherwise, we'll get stuck on question 2.
that was a long answer. I love the debate, though. I like the flow. So actually, I think a lot of my questions have already been touched during the latest conversation. So Sankalp touched the smart money thing and institutionalization, right? What I also wanted to talk about is the security, because last month, two big DeFi services were hacked, and nothing is safe here, right? And everyone has to take care of himself. So since there's no regulation, since you can't put a smart contract in jail or sue a smart contract, what is the level of consumer protection? What is the security challenge, and how do we overcome it for these use cases that are already out there?
And just chime in, I think security, at least if there's a hack or security, you can do something to solve that and over it out. The bigger problem is the projects that launch with anonymous leaders who just take the money. That's a bigger concern.
Right. That's
right?
the thing.
The rug pulling is a bigger one, right? And so it comes down to, I mean, it goes to what Calvin was saying, that we're just in an industry, and what Yat said too. We are an industry that's driven by greed and speculation. And no matter how smart people are and how well they're into it, they'll still dive in without really looking into it. So there's no security technology or regulation that's going to help one guy just say, I'm launching a project. Everybody say, yeah, I think it'll work. I'll throw some money. We don't know who this guy is. And he says, yeah, forget it. I'll just keep the money. So
right.
I think we saw that in 2017 a lot.
Right. Yeah, and nobody really learned. So,
been there, done that.
Well, at the same time, sorry, go ahead.
No, you go ahead. I'm done.
At the same time, I also wanted to mention something like, if you guys still remember, back in 2017, there was a Bangladeshi bank, central bank heist, right? And it was, I think it was around $1 billion worth of, like basically funds stole. And, just that heist alone is more money than, crypto space has ever lost, right? Which is
they robbed the central bank.
Yeah.
The central bank.
Well, the hackers basically
using
the central bank.
Yeah.
Swift, right. So I think it's also, it adds on to the point that security is like an ever-ending game, right? So there's never really the ultimate security. But I think what we should talk about is the instruments, right? So in the regulated space, there's instruments, so there's insurance, right? So there's liability. So why did the hack happen?
As you pointed out, yes.
Yeah.
There's the technology.
Right. So I think it also comes to the space where I think maybe we can discuss here. Should we bring more regulation into the space, right? And then should, let's say, like anonymous founders, even exist, or anonymous projects, or should not? One of the cases I think that you mentioned belongs to Harvest Finance, which is like an anonymous project, and before the hack, they had like more than $1 billion, AUM. So it's like, a typical, like hedge fund, which would have like, more, so like less funds, right, than those guys had. And then yes, indeed, the only, I would say, like from the rug pulling, right, there's like only 48 hours from the like admin time lock. That's so like 48 hours is basically what's the difference between somebody can take, $1 billion or not. And of course, there's like many other technical vulnerabilities, right? That obviously one of which was sort of like exercised there, which is interesting. How
Anton, how do you see Harvest? How do you see Harvest?
How do I see it from
YFI?
Like from,
how do you see their business model and so on? Since you are also in the same space and so on, would you start something like Harvest, or Harvest is definitely not on your entrepreneurial radar, or something along those lines?
I think Harvest, they're utilizing the opportunity, right? So the market conditions. So the way they make money, right, is basically on on lending and reentrancy. So there's a demand for people borrowing crypto, right, which basically provides the interest rates. And right now, as we all talk, guys, right, so we're sort of getting in this next bull cycle, which just drives that demand. So how sustainable that demand is, I don't know. But in this short period of time, their business model is very straightforward and it works. And what's interesting is that it at least it's transparent, right? So what I mean is, you mentioned, indeed, like interest rates, they vary not like on a daily basis, but literally like every single block, right? So every 15 seconds something changes, and then comes the market efficiency, the operation efficiency. But short-term wise, it's definitely interesting. What boggles my mind is that it is indeed an anonymous project, and the question comes in place is that if something goes wrong, is the retail people that will get burned, right? So it's not the institutional money that, as every investor, you never invest 100% of your own money. You always hedge. You never really lose 100% of it, right? Of all your money. That's impossible. But for retail people, it is possible. So if something happens to Harvest, some people will lose, or can lose like most or all of their money, and that's the problem, right? And I don't think that there's a way to recover that. There's no Federal Reserve scheme, right? There's no consumer protection scheme. So it's basically like use it at your own risk. And as we know, people, when it comes to greed and the potential sort of like gains, right? When you see something, oh, I can make a lot of money, people tend to lose that. It's like safety net, right? So that's the problem, and it is definitely something that needs to be solved.
Exactly. Very well said.
Any
Okay,
other,
but then to
any
counter
other
that,
security comments?
I was going to say, to counter that, why is it a problem that needs to be solved? If somebody's entering the space, they know it, and they go, I'm going to do this, I'm going to invest into a project or buy them. There's anonymous founders. I don't know. It's not regulated. And then, I mean, come on, the least surprising thing should be that, wait, they ran away with my money. Like that's my, when these rug pulls were happening, I'm like, well, what did you expect? That should have been the least surprising thing. So in that sense,
that's
it's
collateral
like
risk, right?
survival of the fittest, right? At this early stage of the game, if it is speculative, well, this is the speculative risk that people are taking. I myself, maybe Calvin wouldn't, and we're talking about like, I wouldn't do a project that anonymous. I wouldn't put money into it. And that's me. There's other people who would. So let them weed themselves out, right?
Well, that's again the asymmetry of information. I mean, you are well experienced and you're well aware of the potential risks, and that's just the nature of human being. I mean, if you see a potential opportunity, the majority would most likely decide to. And there's a term for it, right? Like ape in, and it's not for nothing, right? Because sometimes people do recklessly sort of like going in those projects. And that's where, I mean, that's the entire reason that humanity created, like this sort of like legislative, basically a framework, right? We need to defend ourselves from doing stupid things.
Protect ourselves from ourselves.
Exactly right. So that's the beauty of DeFi, because you can build a lot of fantastic things really fast, and it's not regulated at this point. And you can experiment with, options, yields, loans, like really, really fast. So from the technology perspective, I love it, right? But from the financial perspective, it can be harmful. And sometimes that collateral risk, I mean, again, it's like absolute sizes, right? So for someone, $10,000, it's all their life savings. And, like for an investment institution, like $10,000 is nothing. So it becomes sort of like an interesting aspect, like who do we allow to play in this field, right? Which is also like an ethical question. Do you allow people to invest their own money, which is the ethos of DeFi, right?
Anton, but then again, there are centralized networks, right? And you can build your company on top of a centralized blockchain network. BSN is a great example, right? And you can still use Tesla's protocol for that. So what's the point of having that risk?
You got a good point here, but the problem will come that if you build on a centralized network, then regulations comes in. But if you build on the decentralized network, you can just escape.
Yeah, and
that's the Wild West,
And
yes,
Calvin,
exactly.
Calvin,
exactly.
It only lasts so long. Eventually,
yes.
Eventually, Anton is right. We are in the Wild West. Like, remember the early 90s on the stock market in Asia. People would call and buy any stock because the next day they would go limit up. And guess what? The regulator comes in and say, we need to stop that. And it becomes a boring market. So people move and are chasing something new. So the institutional money is going to go into the boring product. And then the cowboys and Indians going to go and trade until you have regulation. But on security, I would say one thing, right? If you use bearer instrument as collateral for DeFi, you're always going to have a problem. But like what we've already explained, asset-backed token sits on the cap table. You can have the same component of capital appreciation and yield and have the security, because if somebody hacked my coin, I can go back into the tape of the cap table and I can move the asset back to who it belongs to. So I think that we're going to migrate from bearer instrument to non-bearer instrument. Maybe regulation will come, but if we look at DeFi as a technological breakthrough, you can actually have DeFi in a very secure environment. You just need to change the nature of the collateral. That's it.
That's the good point. And I'm sorry, we have literally several minutes left. Since we have 6 panelists, I'm going to give you 1 minute to make your last point. So, and I'm even setting the timer. Who wants to be first? Who wants to
I'll
go
be first
first?
because I have to go.
Yes,
So,
okay, go ahead. I'm setting the timer, seriously. You have 1 minute.
all right, okay. So it's definitely a breakthrough. It's finance at your fingertip. Don't believe the hype. Go into understand your risk, mix your speculative behavior and your greed together with your long-term view. DeFi is here to stay. The top 3 player will be the winner. And make sure that you understand what happened on the sunny days and what happened on the rainy days. But DeFi is here to stay, and invest in it. Select the top 3 players. You'll be fine.
Who are the top 3 players?
Well, you can look at where the money goes right now and where the money has gone over the last 3 months, and you know who they are.
Okay, thank you. Okay, thanks. Who's next?
I'll go because I'm just gonna say ditto, and that's what I said earlier as well. I think it's a money game at the end of the day, and top coins will stay top coins even after the great rotation, and so keep an eye on the top 3, 4, 5 coins, and you'll be fine. You'll be fine. Yes, you might miss the 100% yield, but 20% won't kill you.
Okay, interesting point. Anton?
Okay, I'll go next. I'll go, Anton?
Oh, Calvin, okay. Yeah, go ahead.
Okay. My take is DeFi versus asset back and so on. You have to have a mixed portfolio of both. That's why as my fund, we also invested into real estate backed companies and so on. So real estate backed companies or asset backed tokens provide you with a percentage of returns, whereas DeFi give you the X. So you have to have a good balance to make the most money. And that is why my fund, we just spent 65 million, and today we have more than 400 million AUM at hand. Right investment.
Okay, you have 15 more seconds, but then again, Anton?
I'll be very quick. Just keep building it. I believe in DeFi. I believe in the people behind the space, and there's so many fantastic builders. So yeah, just keep building it.
Looks like a building construction site, not a Wild West. Okay, thanks. Okay, Pavel, you want to go next?
Yeah, my thing is, I think what DeFi is, and we all said it's a breakout use case. It's when people say that, oh, is it going to replace traditional? Let's not even get into those conversations. I think we're building a parallel financial system that people are going to choose to use or not. Certain people who are just going to stay away from it and they like the way they're going. People like all of us here, and even my kids now, like, you know, they use Revolut as their checking account because that's what they have to pay in places. Otherwise, their savings, and she's 13, is Bitcoin. So what is she going to use? She's going to use a parallel financial system that might never even use the traditional one. So that's how we got to look at it. Not one replacing other. It's a war. It's like there's just a separate path being built that people are just going to choose to use it.
Yes, thank you. Okay, Bitcoins as birthday presents for kids.
Exactly.
Yet, your last turn. Thank you.
So first, I agree with everything that's been said here, generally speaking. No, I think DeFi is definitely here to stay. Perhaps maybe the one thing I'll add is that I think, again, we think this sort of financification, as it were, of virtual assets inside games through NFTs and blockchain, to me, has an added big opportunity, and that is educating the world, and particularly the young people who play these games, about fintech and finance, right? I never understood why we have to learn about finance by the time we take out a credit card in college and are in debt, which is a problem, right? But if we can learn about finance at 10 years old, by the time we're adults, we will be sophisticated. And then this issue about sort of, you know, this knowledge gap, this barrier of knowledge is not as big as it is, and we become more responsible investors. And what does that really mean to the world if, you know, suddenly we have financial literacy that is actually abundant? You know, and that's what the internet did, right? It made knowledge broadly abundant. And I think DeFi and blockchain can make financial knowledge more abundant.
Oh, thank you. And I have to say that this panel has been one of the most educational and insightful I've ever witnessed. Thank you so much, gentlemen. Thank you for coming to Hong Kong Blockchain Week. Thank you for taking part. Oh, sorry, the timer just stopped. Thank you for taking part in this talk. And I really appreciate you being here. Let's keep building that, you know, strong DeFi thing and not letting the Wild West take us for the wild ride. All right. Thank you. Stay tuned for yet another discussion on DeFi. We're going to talk about ecosystem in just a few hours from now. Thank you so much. Bye-bye, everyone.
Thanks, everybody.
Thank you, guys. Good.